Good morning, everyone, and thank you so much for joining us on today's webinar, all about non-warrantable condos and condo-tels. Now, throughout the webinars, as I'm sure you'll have plenty of questions, please go ahead and type them in the questions tab as they occur to you. And what we're going to do is at the end of the webinar, we got a Q&A with our speakers, and they will address all of your questions. With that, I will turn it over to today's speaker, Jamie Gelso. Take it away, Jamie.
Thank you, Rose, and good afternoon or good morning, everyone. Thanks for joining us here today. Again, my name is Jamie Gilso with LendSure Mortgage Corp. We're here today to talk about specifically condos and non-warrantable condos and condo-tels, and perhaps how we can help you grow your business using these products. So quickly, we'll touch on today's agenda, a little bit about LendSure Mortgage Corp. What is a condo-tel? Condo-tel versus timeshares, some of the characteristics that may make a condo complex non-warrantable or ineligible for traditional financing. Go over some of our programs, and as Rose mentioned, we'll open it up for questions and answers. We have Tim Turley with us today as well. Tim's our Director of Operations and Underwriting in the Eastern US, so he'll be very well versed and able to answer any questions. A little bit about LendSure Mortgage Corp. We were founded in 2015. We're headquartered in San Diego, California. We also have regional operation centers in both Rhode Island and Georgia. We've been securitizing loans annually since 2017. We have a highly experienced management team. Most of our senior management have been in the lending industry more than 20 to 25 years. We currently lend in 42 states and are always growing. We recently submitted our application to the state of Missouri, for example. What do we do at LendSure in terms of what kind of mortgages do we fund every month? We basically serve the A-paper borrowers that you see every day. However, there may be some fallout due to minor nuances, but these are very clean, credit-worthy borrowers. As you can see, our average FICO is north of 700. Average LTV is below 70. About 2/3 of our business every month is of the purchase variety. And what you don't see here is about half of our borrowers are also self-employed and might use bank statements for income. So when you think of that subset of borrowers, you've got self-employed borrowers with good credit, very good equity, who are trying to buy homes, but probably have some tax returns and issues in terms of how they utilize today's tax laws. Well, we don't do at LendSure at all, or any kind of Fannie or Freddie products, no FHA, VA, no HARP or any foreclosure bailouts of any kind. We currently do not offer any second mortgages. So in terms of opportunities for condos and how we can help, in some markets, tight inventories of single-family homes certainly make condominiums more appealing, in some cases more available. It's no secret that the supply and demand curve of housing, particularly of a single-family variety, is a little out of balance right now. It takes a while to build them. So as a result, as families can buy, they do. That leaves plenty of open opportunities for condos in cities. Millennials are now buying their own homes actively, which includes condominiums in cities. We all probably know many young professionals, and some may be on this call today that currently live in condos in big cities. I think of San Diego, for example. A little bit about non-warrantable condos. As many of you may know, there are a few characteristics, or many, that can make a condo complex non-warrantable to be financed by either Freddie or Fannie or FHA for that matter. There's a variety of regions listed here today on your screen, or if you're listening. Some of the common ones are, for example, amount of ownership by one entity, amount of commercial square footage within the entire complex, things like litigation, any kind of recreational activities that are owned or used by the association can make a condo complex non-warrantable. So, variety of things. There's a few different resources you can use to see if your complex that you're trying to finance is warrantable. Here's one of them. However, since many lenders cannot fund a non-warrantable project, because again, it can't be insured in the secondary markets, There's a variety of these opportunities out there. There's a huge market for these. Some in the mixed use area, some are condos above hotels, some are investor owned. In terms of how we do and how we look at non-warrantable condos at LendSure Mortgage Corp, we do allow non-warrantable condos on all of our programs. Low, mid, and high rise are eligible. Of course, these will make, based on geography, a lot of times will make sense. If you're in Miami, almost all your condos will be high rises. If you're outside of Boston, you'll have many smaller unit complexes. Converted homes might be 3 and 4 unit condo complexes now. Our particular subject property must be 100% residential, meaning the part that we are financing on must be residential. We won't finance on the commercial part of it, but we do allow commercial influence. It should be less than 50% overall of the building. It shouldn't have any impact on the marketability of the overall complex, including our subject unit. And of course, that percentage of commercial influence is determined by the appraiser. We ask that there's no further assessments required. So we're very well versed at the condos market and again, available across all of our guidelines, products. We'll dive into Condotels now. What is a Condotel? You might be familiar with some of these properties. You'll see them throughout Florida, for example. Basically, they are part of an overall project that also has hotel rooms for rent. Your particular subject property may or may not participate in some of those rental programs. You probably enjoy the amenities and services of the overall hotel complex. Again, there are many markets where these are common. Florida, some of the bigger cities. I think some of the ski markets, Sun Valley, Idaho, for example, out in Utah, there's plenty out there. There is a distinction, however, between a condotel and a timeshare. And here you see some of those listed. And again, you will all get a copy of this presentation, so you'll have access to all these resources to use in the future as you come across these scenarios. Perhaps you can help out some of your realtors. We offer a lot of opportunities, again, for you in the condotel financing market. We mentioned some of the areas. They can be nicely priced properties, meaning high loan sizes. We see a lot of these buyers come out of Latin America. We also see many come out of Europe and Asia, quite frankly. And it's again based on Florida. You'll see some of the Latin American borrowers. The Northeast, you might see some of the European and Asian borrowers. And same thing with California. We allow up to 75% for purchases on Condotels. And as you can see, we also offer rate and term and cash out opportunities on these properties. 680 FICO please only. These by deed restrictions, you cannot own or live full time in a true condotel. So you'll see some of that here. What we would prefer not to lend on is something that has the word hotel in the name. We don't want to be restricted in our ability to get into the unit if you're the owner, obviously. And you want to control basically how you use your unit in the rental pool. No common interest apartments, and of course, no timeshares. Here's a loan scenario involving a few things that we touched on earlier. We've got a condotel purchase in Park City, Utah. Very nice purchase price, as you can see. It's a foreign national borrower, and the request was for a almost $1.6 million loan amount at 65 LTV. There's two exceptions there for us because our foreign national program is usually capped at $1 million loan size and 60% loan to value for loans greater than $500,000. So you can see we made a double exception here, both to LTV and loan size. Client is from Mexico. He lives and works in Mexico. He's well-heeled, well-versed client. We're able to prove income and assets. True foreign national. Does own a primary and a second home in Mexico as well. I could tell you that, again, if you are dealing with a realtor referral source as an originator, you probably made somebody here pretty happy and can probably get some future business from those sources. This is a pretty nice loan for somebody to close. So we'll touch quickly on some of the other resources available today and how we can help you at LendSure Mortgage Corp. We do offer a very diverse bridge financing program. It's no secret that today's home buying market is very hot. In many areas, some sellers will not accept offers that have contingencies or what's called a Hubbard clause in some areas. Our bridge financing program allows you a couple different ways to help submit offers without having contingencies for sale of current home. We ask that you would reach out to your account executive for further details on that niche product. We do allow for cash out loans up to $1 million. We've gone higher by exception regularly. I've seen us go as high as 1.9 million cash out. As we just touched on, we are very well versed at the non-warrantable condo business. We understand what makes a condo non-warrantable and how we can help you with it. And there's a lot of common mistakes with these products in terms of both condos and Condotels. One that we see, for example, is you may have a high-end residence above a very nice hotel like a Four Seasons or a Ritz-Carlton or a Mandalay Bay. Usually a very high-end property. We just saw one yesterday in Florida, beautiful place. These can be lived in year-round by the borrower, so these technically are not Condotels, but it's a common misnomer that many people think it is because it's above a hotel. It's technically a non-warrantable condo through the commercial square footage and the influence of it. By knowing that, you can get potentially more LTV and better pricing. So again, we can really help you in this market if you are currently operating in it or would like to. We do allow for multi-unit properties in general, second homes we touched on. We've got a pretty strong asset depletion and asset qualifier program where we can take a portion of the assets or all the assets, depending on what kind of account it is. We can amortize those assets over either 60 months or 120 months and create an income stream to be used for qualifying purposes. We have interest-only loans. One in particular is very popular. It's a 40-year term where the first 10 years are an interest-only payment. And then after the 10th year, the loan automatically converts to a 30-year fixed standard amortization. So there's not a lot of risk on the backside. As I mentioned earlier, we do foreign national loans very well. We do a lot of this business each month throughout the country. We will take out construction loans. When you see them, you don't see a lot of them anymore, but lease options and land contracts. We will fund these loans and treat them as refinances, assuming they are structured properly, of course, and they were recorded and you have canceled checks. We understand 1031 exchange as well. Variety of bank statement programs. One thing that's unique about our bank statement program at LendSure is we have what we call a floating expense factor, meaning we'll get the bank statements and we'll also get a very basic self-employment questionnaire from the borrower, SEQ. We'll ask for a few basic questions regarding the business in terms of the cost of goods sold, rent, payroll, etc. And we'll apply a common sense expense factor to the income based on that questionnaire and the industry. So what I mean by that is many companies have a very standard either 30, 50, or 70% expense factor when it comes to their bank statement programs. Well, in some cases that may not work. I think of maybe a consultant or a software engineer that works from home, perhaps a hairdresser that rents a booth at a salon. Those expense factors are probably less than 20%. It might be 15. That could be a deal saver in many cases. So while many lenders have nowadays may have some bank statement programs, ours is unique in the way we really analyze it and perhaps save you a deal and a referral. So why partner with LendSure Mortgage in general? As I just mentioned a couple different ways, both with a double exception deal on a jumbo Condo-tel, so that's unique with a foreign national, as well as some bank statement underwriting guidance. We operate or try to operate when we can with flexibility. We use compensating factors, make sense decisions. We have experienced AEs throughout the country. They have direct access to management, all of the decision makers, people that have credit authority. They can talk through the loan, structure it with you. We have a very strong upfront pre-qual process. We'll help you vet the file. We know that many people have not operated in the non-QM sector in the past. You may be dealing with realtors and referral sources. So we'd like to give you the best answer we can up front. We'll give you a strong pre-qual. If we know the whole story, we can really pin down the income. You could submit your bank statements to us, and we will give you an income number that can be used for your pre-qual, even if you're not approved with us, even if you don't have a full package, but you have a borrower that wants to go and shop for a home this weekend, and you'd like to give them some kind of range as to which they can shop, but you're not sure what to do when you have their 24 months of bank statements gathered. You can submit those to us, and we'll give you an income number that you can at least use and go from there. And that's done by our regional operations and underwriting teams. As I mentioned, we have 3 locations currently. We've just looked at another one, obviously. Currently in Utah. I think we just opened. So, well-versed team, used to doing this business. We encourage the communication up front. Again, we want to know the whole story. We want to give you the best answer we can at the pre-qual side. It would make the underwriting side very smooth. So we encourage that communication between our brokers and those upfront underwriters, as well as the account executives. Lastly, we have a strong suite of private label resources that you can use to market these products to your realtors and spheres of influence and referral sources. We invite you to get on there as soon as you can and use them. There's some really good stuff. And you can schedule a 20-minute call with any one of our account executives. Again, this business might be new to a lot of you on the non-QM side. We'd be glad to get together, talk through our products. They may be really targeted towards your own market, where you are geographically or where you are in your own pipeline, and help share some of these resources with you. So with that, I think we open up for Q&A. As I mentioned, Tim Turley, who oversees all of operations and underwriting in the Eastern US, is on the call with us today as well. Thank you.
Hey, Jamie, before we move on to Q&A, I just wanted to mention one thing just real quick. We had this presentation and it says that the max for rate and term on a condo-tel is 70. And we just changed those guidelines, so I thought I'd throw that out there. We'll actually go to 75 if you have a 740 score. So awesome. It's actually a little better than even it was before. So I thought I'd throw that out there.
Yeah, great bonus. Thank you.
Yep.
All right, everyone. So please go ahead and use the questions tab to type in your questions, and Jamie and Tim will address them. Are there opportunities for first-time investors, and do they need to be Corp, LLC, etc.?
I'll take that, Jamie. Yes, there are definitely opportunities for first-time investors. We have a very strong debt service coverage ratio program, as well as these specific properties. Our debt service coverage ratio, we require that they own their own home, their primary residence, but they can be a first-time investor. Absolutely.
Okay, and I've got several questions asking if I'm going to be sharing a recording of this so that they can share it with their teams, and if they can get the slide deck. Absolutely. Look, in about an hour, look for an email from me, Rose Waldy, and that's going to have a copy of the slide deck. It's going to have a link to those private label resources, so you can start marketing right away. And if you have questions or anything like that, just go ahead and reply to me, and I'll be more than happy to connect you with your LendSure account executives. Are we licensed in all 50 states?
No, we are not. We are currently in 42 states with at least 2 states pending.
Okay. Do we do fix and flip?
Not currently, but we actually are as we speak, in the process of developing that product. I would anticipate us offering it in the next 30 to 90 days.
Okay. Asset depletion. Do you follow Fannie with age of 59 and a half and allow 100% of funds in the account?
We would do that for a retirement account vesting if we can show that they're not going to be extending it to 62 or 65. which we would allow that.
Okay. Does it matter what type of HOA litigation is making the condo unwarrantable?
We're gonna, for us, we're gonna review the litigation. So I guess the answer to your question is yes, but we have approved a ton of slip and fall type litigation, or litigation that really doesn't involve the structure itself, the property. So just because there's litigation doesn't mean it will make it non-warrantable, but it doesn't mean we won't do the loan. We've approved several with litigation.
Okay. Do we do hard money?
No.
All right. Do we do commercial real estate?
No,
No.
but we will consider mixed use properties on a case by case basis.
Up to a 4-unit max.
Yeah.
Are there any square footage or other specific requirements for Condotels and non-warrantable condos?
Currently, our guidelines state that our minimum square footage is 600 square feet. I actually approved one this morning at 497. The biggest thing we're looking for is that they have a full kitchen. We don't do hotel rooms where they have maybe a mini fridge and a microwave, but if they've got a full kitchen and it's under 600, we have approved several of those.
Okay. Do we allow purchases from an LLC?
Yes, absolutely. We close loans in an LLC's name as well as allowing the seller to be an LLC.
Will we allow VRBO or Airbnb rental income to qualify a loan?
Yes, we will. And as long as we can get the rent rolls from Airbnb or VRBO that show it, we will, and there's a history of it, we'll average those over the time period, whether it be 12 months or 24 months.
Okay. And Sarah, I see that you've got a bunch of questions regarding litigation review. I'm going to go ahead and address that for you offline because I want to make sure that you get the most accurate and complete information because it looks like you have a very specific property in mind. So better to have somebody qualified, or have somebody review it in detail for you. How do you market towards non-warrantable condos?
Well, there's a variety of ways. I would look at, in bigger cities, they're easy to pick out. For example, I'm from the Northeast. I think of Boston. There are many condos there that are non-warrantable because of on the ground floor. There's a lot of commercial influence, nice commercial influence. It might be a Bank of America branch, for example, or financial offices, or it's in the city. In certain cities, you have a high rental concentration. So you kind of have to know it's specific to the geography. So you'd have to know your own market a little bit. You can reach out to one of us based on where you are, and we could probably help you once we knew where you're located.
Okay, sorry, must have missed this. What's the max LTV and loan size for non-warrantable condos?
You want me to take that, Jamie?
Sure.
So we'll go up to, we've got those products available on several of our product lines. So for instance, on our super prime product, which is our lowest and best rates, we'll do Condo-tels and non-warrantable condos up to 75%. On our standard expanded program, which will allow for some lates in our A and BB on a non-warrantable condo. We won't do a condo-tel on anything other than AA. But again, we go up to 75 there. On the refi cash out, it's 65% is capped. We'll do the rate and term refi up to 75 on our super prime program, and we'll do up to 75 on our regular expanded program for the condo that's non-warrantable, but not for the condo-tel, will only go to 70. I think I'm probably confusing the heck out of everybody as I'm trying to think through this. But basically, the max is 75. But
Oh,
as Jamie said earlier, we do make exceptions on all of our product lines, and we have done, we make 5% LTV exceptions when it warrants it, and we've got some compensating factors.
Jose wants to know if you can do a Condotel in Las Vegas with bank statements at 70 LTV.
Potentially, yes.
Yes, I was.
Yeah.
As long as he's got a credit score above 680.
Okay. What's the minimum you're looking for a non-warrantable condo? I think he means loan size.
What's our minimum loan size? Is that what the question is?
Yeah, I believe so. It says, what is the minimum you're looking for non-warrantable? I assume he means loan size.
Our minimum loan size is 150,000. We will entertain like 140, 130 we have in many instances. It's common for the area and it makes sense.
Okay. Do you allow DSCR approach on a Condotel?
Yes.
Oh, fantastic.
We will do them on a case-by-case basis.
All right. Okay, someone wants follow-up information on bridge loans and a couple of other programs. How do you get approved? How do you get approved to do business with LendSure? What's the process?
It's pretty easy. You just reach out to your account executive and we can direct you to who that is. We approve all our brokers through Comergence, which is a very commonly used third party. Many of the firms that are represented on this call today that you work for or may work for are already involved with Comergence. Your account executive can give you access to our TPO portal, our broker portal. And that's really it. So it's not a hard process at all. And as I mentioned earlier on the bank statement income piece, we can work with you on the scenario and get the loan going without you being signed up. So glad to talk about any loans.
Okay, I've got a couple of different questions about new construction. One person says before the Fannie requirements are met. Is that something that we can do?
Perhaps, yes, depending on what they are. If you person might be meaning, a first in type scenario or less than a certain amount sold. But depending on what the issue is and based on the complex, we may be able to, yes.
Yeah, we actually did one yesterday out of Florida. It was a new complex, and the builder still had control of the HOA, but they had sold over 50% of the units. Then they didn't have the reserve account set up because it was still in the builder's name, so it hadn't been turned over, and we did approve that loan.
Okay. Do we maintain a approved condo list?
No, we do not.
Not at this time.
Not at this time.
Are you able to do no income, no asset loans?
No.
No.
On our DSCR product, where there's no traditional income calculation, the income number is still based off the cash flow of the property, and that borrower still needs assets to qualify.
I'm not sure what this means, but maybe you guys do. Do you lend on the new tenants in common properties?
We do not.
No.
Okay. And the rest of these look yes, you will be getting a copy of the presentation of the slide deck. Look for that in About Marketing. Yes, the marketing materials link, Michael, is going to be in the email. Look for that, and that's going to the link is going to be to a Google Drive where you can download flyers, postcards, emails, even social media banners. So there's a variety of things on there. And if there's something, if you need help with any of those, just let me know. Just go ahead and reply to that email, and I will connect you. Who's my LendSure account executive? Go ahead and reply to me to that email, and what I'll do is when I reply to you back, I'll CC your LendSure account executive so that they can connect you. What are our turn times like?
It varies, obviously on two factors. One is time of the month. We all know month end is a little interesting in our business. And the other is on the complexity of the loan. So what I mean by that is a DSCR loan on a just traditional DSCR can go through the system very quickly. We do a lot of complex transactions. We make a lot of exceptions. So you might see us do a deal with 2 or 3 different sets of 24-month bank statements. That might take a little longer. But generally right now, our turn time for a new underwrite is somewhere between 3 to 6 business days, 6 being the high end at month end on a tough deal, 3 being probably the norm. A lot of it depends on package we get. We have deals every month that we close as fallout packages for our biggest customers that close in 15 days. We do it every month and almost every week. So part of it, again, depends on the package that we receive and how full it is. Part of it is the complexity of the loan itself. And of course, the last few days of the month can always get a little interesting in our business.
I would add one other thing, Jamie, and that's that our currently we're under 72 hours on a pre-qual approval. If you want a scenario looked at in a pre-qual approval, I think we're currently getting all those done in under 72 hours.
Okay. Kitty, I will email you with your account executive information afterwards, or you can just go ahead and reply to the email and I will CC your account executive. How much income are you looking for on the bank statements?
We don't have a minimum income requirement. Basically, as Jamie mentioned earlier, we're gonna ask the borrower to complete a self-employed questionnaire, which is 8 to 10 questions about their business. It covers things like their current rent and number of employees and what their payroll costs are, and if they have goods that they sell or manufacture, what are the costs of those goods? And we're going to come up with a dollar figure based on the answer to those questions. And then we're going to take their monthly bank statements. We're going to average their deposits over 12 or 24 months and then apply that dollar figure that we came up with as a percentage of their deposits as their expenses. So for instance, let's say their total expenses were $10,000 and their average deposits were $30,000. Then you basically are going to have $20,000 in income that we would use to qualify on. We also would be able to, we wouldn't be charging them on anything that were included in those business expenses. So for instance, if the borrower were to own a truck that he used for his business and he's paying that as part of his business expense, we may be able to exclude that from his debt ratio calculation.
Okay. What's the max DTA on a non-warrantable condo primary residence refinance in Florida?
45.
Okay. And I think that's it for Q&A. I know that we've got some very specific questions that I'm going to address offline so that I can get you all of the information that you need. But with that, Jamie, do you have any parting words for our audience?
No, I really appreciate everybody joining us today. I think there's plenty of markets where these products could help everybody on this call do some more business and perhaps win some more referrals or build some new realtor relationships, and we'd be glad to help do so.
Okay. Tim, do you have any parting words for our audience?
No, thanks for joining us. We'll look forward to doing business with you guys. And the non-warrantable condos and the condo-tels is we're seeing more and more of them. So I would say that if you're not utilizing a source to fund these loans, then you're missing out on some business that could definitely put money in your pocket. So.
All right. With that, I want to say thank you so much to everyone who joined us today. And again, if you have any questions, if you want to follow up, just reply to the email that you're going to get in about an hour from me, and I will hook you up. Thank you so much, everyone. Bye-bye.